Good morning, everybody. It's Christopher from Student Education with the 4 Majors Nuts update for the 12th of December 2013. Okay, guys, let's have a look and see what's happening or what's the setups occurring on for Thursday. We'll start with the Euro against US dollar on our 4-hour time frame. Just going to start with the 4-hour time frames today. And looking at the indicator box over here, we are still seeing a lot of positive sentiment. Yeah, a bit of indecision coming through on the shorter term time frames here, especially the MACD indicator here pointing negativity. But if you look at the overall drive for Euro against US dollar, we have seen upside ever since finally finding support above the weekly fib level. RMO very much directive long-term trend up. RSI, I've added the ADX here for some students who wanted me just to apply so you could see how we actually use it in conjunction with our setup. Very much so, the ADX, this blue level over here, needs to maintain above the 20 line to be still very much a long-term positive trend, and as long as the green line is above the red, then we should be looking for buying opportunities. Here, quite clearly, as I stated yesterday, we are moving into the all-time highs here at the monthly as well as our weekly fib level, 61.8 level above, and the closer we get to that, the more indecision is going to start creeping into the market. And this is where the ADX level, ADX line itself drops towards that 20% level and below. If it trades below that level, then there's particularly no trade. It's consolidative, and as the longer we get close to that, this level here is more likely to drop between that. You can see quite clearly here through this period you have consolidation. For example, here, this end part over here, we saw the 20 moving into that level. However, when we had the decent breakout and moving higher with momentum, you could see that we did get a positive ADX level, and sure enough, there was an opportunity to start purchasing long term again. So very important here as we head higher into this level here. If you are looking to still trade this, you're taking a more risk on because you're trading quite an aggressive entry, and the stop's quite close. Prices, there's only about 40 pips to that level, so you are trading a lot of a very aggressive trend there if you are trading right now, because you're pretty much getting in quite late. So if you are looking to trade the Euro against US dollar, I would leave it for now. Wait for more of a confirmation break above the long-term support and resistance level here at the 1384.25 and change, or look for a bearish engulfing candle, and then we could look to trade on the pullback. Sterling, here you can see quite clearly I drew this massive red box. All the students who were watching yesterday would be well aware of this particular box, but the 4-hour, we wanted to see price trading above it. This is the monthly fib level, which goes back a long time, and you can see for a prolonged period of time over the past couple of days, in fact last week, we saw price trading above that level for some time. However, when price actually broke above it, we failed to see price actually really taking the momentum and pushing it higher. We had a breakout pullback, and then we had this nice 4-hour continuation candle, but no candles preceding that 4-hour close actually broke the high, and therefore there was no trade. Hence the reason why I like using that 4-hour breakout candle. Then we look for the hourly entry. So the hourly candle needed to close higher than the 4-hour here, clearly didn't, and subsequently there was no trade. So I waited patiently for any other hourly candle to precede that 4-hour breakout here, and you can see that we had a full day of trading and nothing happened. Therefore there was no momentum moving it higher, therefore there was no trade, and subsequently what happened? Price rolled over and it's now trading within this consolidative range. Hence the reason why I prefer, when we're trading into major support and resistance levels, to rather give a full day to the market. A daily candle, you're thinking, well, Chris, that's a lot to give away. It is in essence, but it's going to give you more of a confirmation. And if you have a more confirmation that there's more direction, a positive directional movement after a breakout, that's going to be far better going forward long term. If it doesn't, and you see a lot of hesitation candles on your daily at a major support and resistance level, in this particular case the monthly fib, then there's less likely for price to be directional, and therefore no trades, because there's still indecision in the market, and subsequently there still is after the breakout. Therefore we had a retracement. So you got to look at it in that sense when you're looking at particular setups, rather to be patient, bide your time, because it saved you from being triggered into trades that aren't moving with market sentiment, and therefore they become a losing trade, and subsequently you take a loss, and therefore you got to try and now recoup it somewhere. Rather give that to the market, and then the outcome will be that much greater, and you'll be a lot more profitable going forward. Here, sterling clearly moving back within the consolidated range, no trade. It is all positive. Yes, don't get me wrong, everything's positive here. There's one or two areas where there's indecision. However, we're still looking for that positiveness, and you're saying, okay, if it's still positive, then give me a nice bullish engulfing candle close on the daily above the 38.2, something I could actually see where the sentiment is driving it. Otherwise, it's just positive consolidation. It's just consolidation in a positive trend. Using moving on to the US dollar Swiss franc, here on the 4 hour, you can quite clearly see that we have moved now right into the weekly fib level. We were trading into the 4 hour lows not so long ago. There we go. There was a prior one back in latter part of October, and you can see quite clearly we're trading into that level. However, the past 20 hours or so, you can see that price has been very, very consolidated now at the weekly fib. And I said to you, we do need to see a nice bullish engulfing candle close. Ideally, I like to see a daily candle close lower yet again on this particular pair, because then it'll be more directional. I don't mind giving a nice healthy candle to the market, because by doing so, it'll then allow me to see where the market is directional. And if it's directional in the long-term trend, which is negative, that means I can look to then be quite biased long-term. And I know that if I am positive, or if I am patient, I could eventually look at a 685 pip pull by a potential trade. So do I mind losing 120 pips to make 600? Not a chance. So there we go. Here, quite, and you can see on the 4 hour time frame, very, very hesitant, consolidative at the weekly fib. You can see the RMA is still very much negative. There's more negativity on here. Yes, there are 1 or 2 time frames intraday where the R squared is not complementing that selling sentiment, but that's justified because we're trading into a support level. You can see the RSI indicator has now moved positive as we've consolidated, and the RSI is well oversold, and you can see well below 30. So if it starts poking head back up again, and we see a nice bullish engulfing candle, we could very well see a pullback. However, we're still looking for long-term sentiment lows, because the only time this is going to start looking positive is if we're trading back above the institution moving average again. Okay, so we're looking for a bearish engulfing candle close lower, and that would then move in the long-term direction of the trend, and then we could start looking to profit to the downside. If we do get a bullish engulfing candle close on the daily, then we're going to see a lot more of a consolidation occurring, and if we're seeing a lot more consolidation, then we might see a change in market sentiment from one of negativity to positiveness, and then we could target back towards our institution moving average intraday. Last pair of the day, the US dollar Japanese yen. Here, as we've moved higher, we've had a nice trade on the breakout of that huge wedge that we saw over a number of years, and then we had a nice break of the monthly. I wanted to see price trading above the monthly, and subsequently since then we've seen nothing but swing highs and price moving aggressively towards that weekly fib level. As we've headed higher, we started seeing a lot more consolidation, i.e. profit taking as we headed higher, because obviously if you're trading, you want to be taking profit. You can quite clearly see here the US dollar Japanese yen has been very, very positive. RMO still above. However, as we've headed into the weekly fib level, which is our April highs here for 2013, you can see we've made higher highs or attempted the same high, but you can see the RSI has really significantly dropped. So we're seeing a lot more change in market sentiment now, because the RSI is moving now from one of positive to one of negativity. We're seeing lower highs on the RSI, and I'll just show you that to you. There we go. There was the first high, and you can see the next high was pretty much smack bang on target with the prior one. However, you can see that the RSI was a lot lower. Okay, so RSI is plotting market sentiment. So therefore, if price is making higher highs, RSI should be moving with it. When she's not moving with it, and she's moving counter, then it's telling you that there's a change in market sentiment. And that's pretty much the case as we head into these, heading into the weekly high. A lot more here with a lot of buying sentiment coming through, and as we head into these weekly highs, you can start seeing a lot more profits being taken, bigger pullbacks. So therefore, this is still long-term positive. However, we do need to see the weekly fib level highs here, the April level highs being breached, to see any further buying sentiment. If not, then what we could see is price actually falling over, and if that's the case, you break the swing highs here, for example, the near-term one would be here, for example, here at 102.32 and change, then we could see price falling lower towards the institution moving average, but back towards our monthly fib levels, or the breakout levels that we saw recently back in November of this year. Okay guys, short and sweet to the point today. Be aware there's a lot of news out today. We had some favorable figures last night for the Australian market. We had good figures for unemployment change. In fact, it came out almost at 11,000 better. Unemployment rates came out as expected. This after at 8 a.m. GMT this morning, we have President Draghi speaking. So anybody trading euro crosses, just be vigilant. There might be a bit of speculation, volatility prior to his speech and after. This morning, for anybody trading US dollar Swiss franc, we have the LIBOR rate. Very, very important. Then we have the Swiss National Bank monetary policy assessment, followed by the press conference from the Swiss National Bank. And then we have the ECB monthly bulletin. We have Euro industrial production month-on-month figures, which is important. Expecting a positive figure here, coming from a negative 0.5% to a forecast of 0.4%. So almost a 1% change there. Then this afternoon, we have a lot of news out for the US market. We have core retail sales figures month-on-month, retail sales figures month-on-month, unemployment claims, very, very important one. We have import prices, very important. And then we have this later this afternoon, we have the Bank of Canada Governor Polzer speaking, followed by the end of day, we have the Business New Zealand Manufacturing Index. So a lot of news out for both Swiss in particular. We have also Draghi speaking, but we also have a lot of news out for the US dollar. So please factor it into your trading today if you are trading any of those particular pairs, and back it up with sound money management, guys. I cannot emphasize it enough. You might have the best template in the world, but if you don't back it up with money management or proper or sound money management, your template's worth nothing. Okay, very, very important. Always apply stop management. Always apply the proper money management rules to any trading setup that you're doing. Other than that, I'm gonna leave you with that. Hope you have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.